Hey there, fellow landlords. If you've ever asked yourself, is rental income taxable? You're definitely not alone. Whether you've got one property or a whole portfolio, understanding taxes is crucial to running a successful rental business. But don't worry, I'm here to help break down everything you need to know, from what counts as rental income to how you can track your expenses and deductions. By the end of this video, you'll feel way more confident when tax season rolls around. Let's dive in. So, first things first, is rental income taxable? The short answer is yes, but it's a bit more nuanced than that. If you're renting out a property, it's considered a business, and just like any other business, your rental income is taxable. This includes the rent you receive from tenants, any advance payments, and even bartered services like cleaning or yard work. That said, there are exceptions. For example, if you're renting to a family member at a significantly reduced rent, it might not count as taxable rental income. But in general, you'll need to report everything to the IRS and your local tax authorities. Let's talk about how you can track this and make sure you're doing it right. When it comes to calculating taxable rental income, here's the basic formula. Start with your gross income. That's everything you've earned from your rental properties. This includes monthly rent payments, advance rent, late fees, and anything else your tenants provide in exchange for living in your property. Then, you'll subtract your allowable expenses. These are things like maintenance, repairs, mortgage interest, and property taxes. Once you've done that, the leftover amount is your net income, which is what's taxable. It's pretty straightforward once you break it down. Let's walk through an example. Say you earned $20,000 in rental income this year. Then you spent $5,000 on expenses like repairs and advertising. After deducting those costs, your taxable rental income is $15,000. That's the amount you'll report to the IRS. So now that we've got the basic idea, let's talk about common rental income deductions, because this is where the magic happens. By understanding the deductions you're eligible for, you can lower your taxable income and keep more of your hard-earned cash. One of the most common deductions is maintenance and repair costs. If you fix a leaky roof or repaint the walls, that's deductible. Just make sure you keep detailed records and receipts because you'll need them when tax time comes around. Next, don't forget your mortgage interest and property taxes. Both are deductible. Make sure you hang on to your mortgage statements and property tax bills throughout the year so you can claim the full amount you're entitled to. Another big one is depreciation. Over time, your property loses value, and that's something you can deduct. Typically, for residential properties, the IRS allows you to depreciate the property over 27.5 years. Just remember, this only applies to the building itself, not the land. And don't forget about things like utilities and insurance premiums. If you're paying for water, electricity, or gas for your tenants, or covering the property's insurance, those costs are deductible too. Even if you're covering utilities for common areas, like water in a shared laundry room, you can write that off. Finally, marketing expenses are deductible. Whether it's digital ads or print flyers to find new tenants, the cost of advertising is a legitimate business expense. So, as you can see, there are a lot of ways you can lower your taxable rental income. But, let's be honest, navigating rental taxes can be a little complicated, especially when you've got multiple properties to manage. That's where a professional property management company like Bay Property Management Group can really help. Not only do we assist with tax deductions and managing your rental income, but we also handle maintenance, legal compliance, inspections, and rent collection. If you're ready to maximize your savings and reduce your tax burden, reach out to us today. So, there you have it. Yes, rental income is taxable, but with the right knowledge and strategy, you can make the most of your tax deductions and keep more of your money. If you found this video helpful, don't forget to like, subscribe, and hit the bell for more tips. Until next time, happy renting!